Greetings everyone, welcome aboard. Joseph James, SchoolOfTrade.com, June 10th, 2010 with your live trading recap. Guys, did you miss today? Did you miss yesterday? Guys, we keep getting better and better the month of June. Wasn't June supposed to be a sleepy, slow month? Well, you know, here in Los Angeles, California, we call it the June gloom, right? Where supposedly it's that month before the summertime kicks in and it's not really the springtime anymore, right? But boy, June is really heating up here in the live trade room. I want to remind you guys, we have a link below the video right now. If you're watching this video anywhere else besides our YouTube page or on our blog, there's a link right below the video that will take you right to our blog. Now, our blog, in the past 3 days, we've called 3 big winning trades on that blog, and there's one setting up right now, so check the blog, and the link is right below the video. Now, we had another great day in the room today, guys. 2, 4, 5 total trades. Now, yesterday, we made 123 ticks on 10 trades. Today, 159 ticks on 5. So, as you can see, yesterday, right, 10 trades to get there. The average trade was 10 ticks yesterday. Today, you can see, boy, the average is probably close to 30 here today. So, as you can see, guys, there's no way we can sit here and say this method doesn't work in every type of environment. Yesterday, slow and choppy, small, tight trading ranges, we still made a ton of money yesterday. Guys, it wasn't as easy as it was today, but we still made a pretty darn good income yesterday. But today, obviously, 160 ticks, 1645 on 5 trades, guys. Much bigger moves today. But as you can see, guys, it doesn't matter whether or not we're getting big moves, small moves, our methodology, most importantly, our trade management strategies are going to make sure that no matter what type of environment, we're going to be profitable every single day. So, 159 ticks, that brings our weekly total here to $4,900. Guys, we've got 490 ticks this week alone, 823 ticks for the month, guys, almost $8,300 USD, and we're just shy now of 60,000 bucks for the year on only 4 contracts, guys. You don't need a large account. You don't need to be a full-time trader, guys. We traded for 3 hours today, guys. Not too difficult. Come out and join us tomorrow morning in our live trade room. Now, what's the most important thing that happened today? Well, we had jobless claims at 8:30. That gave us a little bit of volume. But we looked right at gold this morning and saw gold. We had pace of tape less than 50. Right, we had the ATR dropping on gold, sideways ranges. We were right in the middle of that sideways range on gold, so we knew right away gold was not going to be our horse today, right? I was not going to make my retirement on gold this morning. So we then began to look at other markets. And what we quickly saw was that the scalpers, right, the 4-range charts, the 1-minute charts, right, the go, go, go patterns, they weren't really setting up very well today. And so as we know, we talked about this in members training yesterday. We talked about how if we're not seeing the fast time frame working, okay, just simply keep slowing it down until you begin to see the patterns. Now, we even talked about today seeing the sellers come in late or momentum confirming late. Okay, so if I'm on a 1-minute chart and I see the sellers coming in late, right, the patterns aren't lining up because momentum's not confirming, guys, that's going to tell you right there, slow things down and keep going until you start seeing the patterns work the way we need to see them. So we quickly moved to a slower time frame, and then cha-ching, right? That's when we started seeing all kinds of great patterns showing up. The slower time frames work great today, guys. We talked about it yesterday in training. We sent a video out this morning on it, guys. There is so much information on our blog right now and in our members materials about how to use slower time frames, guys. Let's take a look first, though, at where the dollar index showed up today, because the dollar always tells us where to go. And hopefully the dollar will give our Celtics some encouragement for today, too, because we need to get that win tonight. Go Celtics, right? The Lakers, we got you right where we need you guys. All right, so dollar index futures, this tells us the story. Now, this is a great example, guys, here. On the dollar, symbol DX. Now, today was contract rollover, so we're going to be jumping forward to the 910 contract. But as of right now, I'm trading the 610 contract, because the volume was higher on the 610 today. Even though it was contract rollover, I follow the volume. So volume, of course, tomorrow will probably be above, so we'll forward over to the 910 tomorrow. But for right now, on the 610 today, all right, guys, on the DX. Now, this, of course, is my 34 range chart, slow time frame, but I've zoomed it all in. Now, what do we see here? We see a downtrend, don't we? Right? Lower lows, lower highs. We see a downtrend. Now, normally, that downtrend will tell us, hey, we should be excited about lots of patterns today, right? We're going to get lots of movement. The dollar is moving. If the dollar moves, everything else moves. But guys, I want to show you just how important it is to zoom out, take a little bit of a bird's eye view. Now watch what the next screen is. This is the same chart, but now in NinjaTrader, I held down the control button and I tapped the up arrow, right? Control and the up arrow, that will now squish the charts together. Then I'll click on the vertical axis, right, and squish it down, and that way I can see everything I need. Now where are we? Okay, now notice where we are? We're inside of a big sideways range, right? See this big sideways range here? Okay, now, what do we know about that sideways range? We got our highs, right, our lows. We know in the middle here, we want to be very careful. So, we began our day thinking the dollar, right, remember, here was the first chart we looked at. Now this tells us, right, blue skies ahead, let's rock and roll, right, trending dollar down. But then once I look at a little bit of a bigger picture here, I realize, wait a second, we are right in the middle of that bracket. Now we talked about this as well yesterday. If I see on a fast time frame, I'm good to go. But on a slow time frame, I'm right in the middle, right in that chop zone. What do we say? Don't fiddle with the middle. We need to use caution. So now everything will be higher risk on the dollar. Okay, this is a great example. Look at a bigger picture and make sure you keep an eye out for that middle, because the middle is going to tell us if the dollar's in the middle like that, we're going to be expecting the rest of our markets to be looking for some more clarity, right? They're going to be looking for the dollar to go up, so they'll go down, or the dollar goes down and they'll rise. So in the middle, we now expect to see, right, about this time we said, okay, maybe we should be looking a little bit differently here now. Let's be a little more conservative because the dollar clearly is not confirming for us here. All right, let's keep moving. Now we also took a look, when we go over our charts for the first time each day, we mark up double tops, double bottoms. Now here's another great example of just how important this correlation is. Now on the left side, I have my dollar, right, my DX. On the right side, I've got my crude oil. Now guys, the dollar has a negative correlation to currencies, commodities, right, stock indexes. And of course, on the dollar, right, left-hand side, we went through our morning routine and we looked for double bottoms, right? Double bottoms are support. Now look here on the dollar and you'll see we have 1, 2, 3, 4, 5 levels of support, and we've got 1 level of resistance. Now remember that negative correlation? We then went over to the crude oil here. We looked at crude, and what do you think we see? We see 1, 2, 3, 4 levels of resistance, right? And 0 levels of support. So the correlation, as you can see, is confirmed here. We see double bottoms on the dollar. We're going to see double tops on the crude. And we talked about that today by saying because we see double bottoms on the dollar, we should expect to have the short side work out with us more often on other markets today. And as you can see, we took 3 trades on the short side, guys, and did very well in those trades. In fact, they were our biggest trades of the day. Let's take a look at the trades we took today, guys, and don't forget, keep an eye on that correlation. Double bottoms, support on dollar. You should see double tops and resistance on other markets. And guys, as you can see here, 5 total trades today, guys, 3 of which were short. And those 3, 27, right, 22 ticks, 33 ticks, 45 ticks, I think we're on to something here.